Okay, let's dive in. Something pretty interesting just happened in the crypto world to kind of put the brakes on things. We've all been watching this really powerful rally, mostly led by Ethereum, right? But suddenly it seems like that momentum just stopped. So today we're going deep into a market report from July 22nd, 2025. Our mission really is to pull out the key insights for you, help you understand what's actually going on with this market shift. A lot of it seems tied to regulatory uncertainty. We'll look at the main reasons for the price rejections, shifts in institutional money, and talk about what you probably watch next. So starting with the immediate picture, the market snapshot looks pretty stark. Ethereum got, decisively rejected from that $4,000 resistance zone, pulled back quite sharply, didn't it? Down to around $3,700, and Bitcoin kind of followed suit, dipping below $117,000. Overall, the total crypto market cap pulled back a bit too, down to $4.1 trillion.
Yeah, and what's really fascinating, I think, is how quickly institutional behavior shifted alongside that price move. We're seeing, for the first time in weeks, actual net outflows from the big U.S. spot Bitcoin ETFs.
Oh, really? Like which ones?
Like ARKB, GBTC, the major ones. We're talking tens of millions of dollars flowing out. And this matters because, that inflow was a primary catalyst, driving the rally. So that's temporarily gone. Plus, on-chain data confirms it. The whales, the big players, they seem to be in a wait-and-see mode. Definitely not piling in like they were.
Net outflows from the big ETFs.
Yeah.
That really is a change from the recent trend. But, okay, despite that, the Crypto Fear and Greed Index is still way up there at 74. Still says greed. Yet the report mentions this bullish feeling now kind of lacks enthusiasm. That seems contradictory. What's causing that? This sort of nervous greed.
That's a great question. And the dominant factor everyone's pointing to, it's the White House. Their first big, comprehensive crypto policy report is expected, today actually, July 22nd. And that's just injecting massive uncertainty. It's a major event risk.
Okay, so people pulling back.
Exactly. Traders are de-risking, reducing exposure before the news drops. Because it's pretty binary, right? A clear positive framework that could be really bullish, new money coming in, but if it's restrictive or even just vague and ambiguous...
It could be sharply bearish. Got it.
Yeah.
The market's basically just holding its breath.
Precisely. Waiting for that clarity.
Incredible how one report can just freeze everything like this. So with all this uncertainty floating around, let's look at the derivatives market. Things often get amplified there. Why is Ethereum failing to break $4,000 suddenly so critical in that context?
Well, connecting it all, the risk profile has sort of flipped. We were worried about a short squeeze, people betting against the market, getting forced to buy back, pushing prices up.
Right.
But now, with this record high open interest, that's all the futures and options contracts out there, that huge pool of bets, which looked like fuel for more upside, is now seen differently. It's viewed as a massive pool of potential sell-side pressure. Meaning, if we get bad news, like a negative regulatory report, all those leveraged long positions...
People betting on prices going up.
Exactly. They could be forced to sell quickly to cover losses. That triggers a long squeeze, a sharp, fast correction downwards.
Okay, that definitely sounds like a volatile setup. A lot of money just waiting to react.
Yeah.
So for listeners trying to navigate this, what are the really key levels to keep an eye on right now?
Good question. For Bitcoin, the critical support level seems to be around $115,000. Keep an eye on that. And resistance is up near $120,000. For Ethereum, holding $3,500 is really crucial. That's the key support. And $4,000 obviously remains the big resistance target they need to break through again. These are pretty much the clear lines in the sand now. The market's next big move likely depends on breaking one way or the other.
Right. So, summing it up, that euphoric rally, definitely on pause. We're in what the report calls a high-stakes consolidation. And it feels very much like a news-driven state, wouldn't you say? Less about pure momentum now.
Absolutely. It's all about reaction to potential catalysts.
Yeah.
And understanding these dynamics, the institutional pause, the regulatory overhang, the derivatives risk, helps you navigate this uncertainty rather than, just being swept along by it.
Definitely. So maybe a final thought for everyone listening. Given how intensely the crypto market is reacting to just the potential for a regulatory framework, what does that tell us, maybe more broadly, about how regulation impacts innovation and these new technologies generally? It seems like clarity, or maybe the lack of it, can sometimes be a bigger market driver than the tech itself. Something to think about.
Okay,